The moment that trading changed for me was when I detached myself away from the outcome. Now, when I go into a trade now, I ensure that it is an A plus setup, and I don't focus on winning or losing. I focus on executing the trade correctly and follow my rules as close as possible. As soon as you attach yourself to the outcome, that's when your emotion starts playing in and starts factoring in. As soon as you see yourself in drawdown, everything's running through your mind. You got fear, you got nerves, anything you can think of, anything to ensure that you're not going to lose that trade, such as closing your trades early or waiting for price to hit break even just to close the trade out completely. And for me, as soon as I take that trade, I'm stepping away from the charts. I'll manage it, but regardless of which direction it goes into, I'm just going to be emotionless. I know it's hard to say, and I know a lot of people say, it's impossible to do that, it's impossible to do this. But I think once you've experienced it enough, and once you've actually put yourself out there, expose yourself enough to losses or expose yourself to enough trades, then you just start to see your trades as part of the win rate. Because obviously not everyone's win rate is going to be 100%. Got to consider that a lot of win rates are between 60, 70, maybe some might be 80, but the other percentage to that are losses, and you have to just sort of accept that. You have to accept losses. The best losers in trading are the biggest winners because they are able to handle their losses and not let it affect them. Because I can guarantee there's people out there that will take a losing trade and it just absolutely ruins the rest of the day for them, which is not right. That's not correct whatsoever. You need to be able to take that loss, see the next trading day as a new opportunity and not dwell on that, not dwell on anything in the past. You still got to reset your mind to think that there's always new opportunities, because if you dwell on the past, then it's just going to have a psychological effect going forward. And yeah, you gotta think that trading is all about psychology. 80% of it's psychology and 20% of it's strategy. If you can't if you can't hack the fact that it is majority about psychology, then trading is not for you, as harsh as it sounds. But you just gotta have that mental toughness to be able just to withstand losses in general. See, trading is one of those jobs where you don't get paid an hourly rate, you get paid based on your decision making. And that's where a lot of profitable traders thrive, because they're able to sit on their hands 90% of the time and wait for that 10% in order to execute the trade correctly. It's so hard to factor that in because it's just something that we're not used to. Our brains are not designed to be that way. You know, we have our fight and flight modes, and a lot of the time when we start to see our P&L go into the red, our flight, our fear starts to kick in. And like I said, we're not used to that whatsoever, so we just have to adapt to it. And that's where exposing yourself enough to the market, exposing yourself to enough losses is going to come in hand. Risk management is another thing as well. A lot of people tend to go into trades, and the reason why they're scared or the reason why they're very fearful is because they've over risked. They've put too much risk on the table to the point where they can't handle that profit and loss or the P&L being a lot higher than they expected, because they're not used to those numbers, or it's the fact that they've risked so much to the point where their account's at risk. When you start to size accordingly, 0.5%, 1%, then your mental state is a lot better because you can handle that loss. Because you know for a fact that if I take a loss on my funded account, I've got 4 more trades I can take before I blow the whole account. But when people are risking 2% or the max daily drawdown, the max daily limit, whatever you want to call it, that's when they become fearful, because it's like, well, if this hits my stop loss, then there's a good chance I've lost this account now. And again, you need to size accordingly. You need to be able to risk the amount that you're happy with. The question I always ask myself before going into a trade is, if I take a loss now, would I be happy with it? And majority of the time it's yes. Of course, I have times where maybe I've not followed my rules as well as I should have done, and it does leave me frustrated. But like I said to earlier, like I can deal with my losses a lot better now. I think I've blown 2 accounts maybe like 3 weeks ago after having a bad losing streak. And for me, when I first started, that would have had the worst mental effect on me, the worst psychological effect that I could ever have. But now, for me, losing those 2 accounts was like, okay, this is a lesson learned. This is where I've got to adapt to these new markets where they may be quite hard to read in comparison to the year before. That's just what trading's all about. It's all about being able to adapt, being able to see that losses are not part of failures, but they're new lessons to learn. They're new opportunities. They're new ways of trying to refine my strategy in order to be able to trade the current markets where uncertainty is a lot more common. So I just think, if you want to work on your psychology the most important thing is risk accordingly. Take trades that fit your model, that are A++, and journal your trades as well. I can't stress to you how important it is to journal your trades. When you journal your trades, you've got data that you've collected over a period of time, and you know which days you should avoid. What trades fit your system perfectly to the point where if you see that again and you've identified that on the markets, then you know for a fact there's a good chance that this trade might work in my favor. Having data is probably the most important thing because you can refine your strategy as well for it to become more effective, to optimize it as much as possible. And that's what I'm saying. Like, trading's all about being able to adapt all the time. You've got to adapt because each year is not the same price action as the last one. It's so important. I can't stress to you how important journaling actually is. Now, if you want this to be something serious, then you have to do all these things. The reason why unprofitable traders stay unprofitable for the longest period of time is because they don't do the things that the profitable traders are doing. Yes, maybe over time the more experienced ones don't journal as much, or they're not as disciplined as they used to, but that's because they've got that discretion in the market. They've done it so long, they've been so experienced with the markets that they just know what they need to do. Whereas new traders need to have these good habits in place. Otherwise, if they keep following the bad habits, then they're only going to go down this unprofitable route. And that's when a lot of people stop trading. That's when that's when the 98% or 99% of traders fail, is because they're not willing to put that work in. Yes, don't get me wrong, it's long hours, it's this, that, and the other. And social media is definitely put a light on trading where it's like it gives you time and financial freedom, which it does, but there's a lot more to it than just that. That comes later on when you've had years of profitability. But what they don't factor in is that middle part where you have late nights, when you're back testing, when you're taking losses, when you're losing accounts. All these things, they take a massive toll on your psychology. For me, even I had to take 6 months off last year because I just couldn't deal with the markets. I couldn't deal with the losses I was taking. And then come November last year, I've had the best run in trading that I've ever had. I've gained the most amount of capital I've ever had, sitting at 600k in capital funding right now, which is amazing to see, an amazing achievement for myself. And obviously now I've got new and bigger goals that I want to achieve, and I know that I will achieve them. But it's all about being consistent and being disciplined. It's good to take a break sometimes, because when you take a break and you sit back and look at the bigger picture and you think, hey, I know exactly where I went wrong, let me change that now. And then when you come back into the markets and and you start working on the things that were letting you down previously, that's when you start to see improvements. That's when you become a better trader. That's when you become a better person. Because remember, having discipline and consistency on the charts is only going to transfer over into your day-to-day life, and vice versa. Being disciplined in your day-to-day life transfers over onto the charts. And I think it's so important that not only are you building yourself as a trader, but you're building yourself as a person, as an individual. Setting good habits, having good nutrition, going to the gym, going for walks, going outside, spending time with family, spending time with loved ones. Doing all these things are so important, and you don't realise the knock-on effect it has on the charts. Because when you sit in the charts 24 hours a day, it's not good. It is not good at all. You get analysis paralysis. You start taking trades that are not even there. You start to see setups that are not even presenting themselves. You trade in different sessions to what you used to. You know for a fact that you should be trading New York session. Why are you trading Asia session? Why are you trading London session? I know for some people it works, but that's because that's part of their strategy. That's part of their routine. Whereas for me, I only trade in New York because I don't want to be on the charts all day. I don't want to be taking unnecessary losses. I don't want to lose my capital. I want to preserve it as long as possible to the point where I can actually utilize it so that when the markets are showing opportunities, I can utilize it so much to the point where I can profit from it. You need to work on yourself. You need to work on yourself. Have routines. Routines are a big thing. Routines ensure discipline. They bring discipline into your life. Having routines over a long period of time is consistency. You need these two things in order to succeed in anything, not only trading, in anything in life. Psychology is a huge thing, and I'm a huge advocate for it. For me, even though I do day trade, the psychology aspect for me is a lot more important. That's what I really want to teach to people. I want to teach them the benefits and the impact that it has on you. Because once you can master this, you can master the charts. You can master anything in life. Trust me, anything in life, you gotta think that psychology. Let's take, for example, athletes, people that go to the gym, people that play sports. Psychology is a huge thing because if you have confidence and you believe in yourself, then you can reflect that in your performance. So yeah, that's why I think psychology is so important. Now, if you've got any questions, please comment down below. I'm more than happy to answer any of your questions. But yeah, that's my rant done for the day. Hope you liked the video. Please like, comment, subscribe, do what you need to do. Thank you for watching.